Mrinal, thank you so much for dropping by in Wizards.
Thanks so much. It's a privilege to be here with you on the show.
Mrinal, let me take you back a decade back, 2007. You're married, you're an engineer, you're working in London, and yet your wife tells you, go follow your dreams. What were the dreams that you were harboring?
So, the thing was, I used to get up early in the morning, 4 o'clock, and then my wife would ask, what is it that you keep looking on the screen? And I told her, yeah, the markets are open in India, they open at 9, and this is what I am seeing, that how have the markets doing. And she kept on seeing that, and it was very obvious for her, if you want to do that in life, why don't you just pursue that? And it was, yeah, I have been dabbling about it, but then, and it just gave me the push which I needed.
Mrinal, you know what they say, where there's a fire, there is smoke. What stoked your interest in markets? At what point did you think you had the bug of equities?
Even as a child, and in those days, if you remember, even the leading dailies used to have those price quotes, the share price quotes in the back page and the business page. So I would, as a child, look at them, and I was always intrigued, inquisitive about what is it. The prices keep changing, but numbers keep changing. And I asked the elders, and they said, this is the share price. It's a part ownership of a business. You're entitled to some bit of profit because you're part owner. And they change it every day because the market decides the price every day. So that was interesting, and it always was on my back of my mind that I want to pursue something in this. It attracted me.
2008, you got a real life MBA. Your dream of getting into stocks almost became a nightmare thanks to Lehman. Tell me how you handled that period and your experiences of that time.
So the professional investing started for me in 2008 starting, and in those days, if you remember, those murmurs of those something called subprime happening in the West, and there were always these talks that these things keep talking about, nothing happens. But then clearly for a bottom-up kind of fundamental guy, I could see that things are not in place. Fundamentally, we are not able to justify a lot of things that are happening in the price and the markets, and that was troubling. But then even approaching Lehman incident, by October the markets had started drifting down, and there was this Lehman that happened, and then there was sheer pain. But as an investor, particularly a bottom-up investor, clearly there was a hunting ground. There were a lot of opportunities, prices were very appealing. So yeah, baptism by fire, they say.
But in retrospect, it's fine, markets rebounded, everything is fine. Did you ever feel that chucking the towel and going back to engineering at the depths when the Sensex went below 10,000?
No, in fact, everything I wanted to, in the jigsaw of understanding of the markets, feel and understand was there. It was so obvious that this had to happen. You need to have a temperament to see through it.
And so you felt that crisis actually gave you an opportunity, right? Because you were pushed into a sector that no one was looking at that time, technology.
Yeah, so besides other sector, at that juncture, post the Lehman, everything to do with West was kind of uninteresting, particularly to do with US, and technology in India is very much US facing. So it was like, okay, you look at it. And to me, although it might have not been the most interesting things in those days, but to me it looked like a very good opportunity. There were hordes of things happening, a lot of action, a lot of price movement, and a lot of potential great investment opportunities.
You know, in real estate they say location, location, location. In investing, in finding great stocks, the first thing you say is market cap, market cap, market cap. How does market cap help you make better investing decisions?
So because I look at potential investments as trying to buy a part of the business.
What you learned early on.
Yes, and that's very important that I look at it as in terms of what the market is ascribing to it as a value, and that's market cap. And even a target market cap. So I typically work in terms of market caps. The businesses could be maybe evaluated better on price to earning, price to book, but those are ratios.
How do you assess management? I mean, how do you look or spot the indifferent management from the great management?
We at ICICI go to a very great extent trying to get that assessment right, and that's very important, particularly if businesses are small. We tend to do a huge amount of work around if they have a listed history, see how they have dealt with the minority shareholders in the past, good and bad times, lenders, stakeholders like vendors and customers, and things like those. We also like to evaluate if ours as minority shareholders, investors aligned with the promoters, how have their neat accounts been, how have they dealt with the balance sheet.
What are the red flags that you spot?
So very often we've seen there are businesses which tend to use capital markets to wash their sins and bad capital allocation. And when they do have great times, they tend to have accounts in a way which are not trying to share profits with minority shareholders, and that's a very important parameter that we look for. We want to see how they've done in their bad times. We want to see how they've done things in their good times.
Let's put it all together. You figure out market cap, you figure out management, you figure out the opportunity size, and you put it all together in a stock called Natco Pharma. Tell me how and why you spotted that, and why did it turn out to be such a winner for you?
So, well, we don't comment stock specific, but as an illustration, I'll talk about it. So,
sure.
During our primary research in the healthcare sector, and this is one of those sectors which has a lot of third-party bodies, NGOs, and the likes. It impacts everybody. A lot of data also is available. So, we noticed that there is one part of that therapy, cancer, which is getting missed because it's not getting captured, because the pharmacists typically don't dispense the cancer medicine.
It's sold in the hospital directly.
Yes, so it's the very nature of how cancer is treated in India. And interestingly, if you notice, even today 56% of Indians are below 30 years, and that's a very young society. So, well, this is young, they have aspirations, but then after 10 years this would be the same people which would be 40 years, and at that juncture is where they start knocking in terms of lifestyle diseases, maybe a combination of diabetes, healthcare and the likes. So it's a big potential market for lifestyle diseases, chronic as they are called, and cancer was being missed because the data wasn't getting captured. So we did a huge amount of work trying to capture the data on cancer, went to leading practitioners, hospitals, opinion makers, NGOs, third party bodies.
And the prices also generically far lower than the competitors, right?
Yes, so besides the obvious names, there were a couple of names which particularly from leading practitioners came across. We did work around it, meeting the management. Not the most important thing, but obviously is do work around their vendors, competitors, and competitors are a very good source to talk about.
And one of the competitors, if I'm right, actually bought the shares after you did.
Yes, so that's right, that's a validation. It feels good.
That's Sangvi of Sun Pharma, just for the record, right?
So we made the investments at the what we believe was the right price, and we were happy because we knew we were ahead of the street. We were the first institutional investors, and then clearly competitors bought at later juncture in a financial investment manner. We were happy the stock's done well for us, so have quite a few other.
Philosophy comes together here. You found a cheap market cap, you found a great opportunity, target market cap, good management, absolute return possibility. Boom, Natco Pharma is a great pick.
Ticks all the boxes?
Yes. Another pick, PI Industries. What did you spot in this pick?
Again, not being stock specific, if you look in the value chain of the entire agri space, and agri is a very big part of the economy, there are seeds which are partly regulated, then there are these fertilizers heavily regulated, crop prices very heavily regulated. So the only part of the value chain is the agrochem, which is not regulated, a bit of free market economy. We've always been more interested in that space, and we've been invested in that space. So I would track this set of companies, not invested, but I would track. And then I saw this company was increasing its revenue and profitability without increasing volumes. And that doesn't regularly happen in chemical and food derivative
businesses. They're moving up the value chain, and higher margin products perhaps.
And in the free market, you can't raise prices so easily. And then we did a lot of work. We realized their products were very well accepted. The yields were improving. They were doing very well. In fact, there was shortage. And these guys were actually refusing business. They had an export business also, and they were doing very well over there also. So we clearly saw that a business having surplus demand, lack of capacity, and to our happy surprise, they were in the midst of capex. So we knew we had a winner at hand. Did all the bottom-up evaluation, financial analysis and all. Waited for the price, bought it. Again, the market wasn't looking in that direction. We were happy. All the tick boxes, margin of safety is there, management is there.
You manage a lot of money. How much do you manage for the record?
So upwards of 2 billion US.
How do you deal with that kind of money?
So being in the market itself is very joyful. And money being small and big, responsibility is equivalent. Obviously the money goes up and down based on the market. Market is moving every day, but then that's not something that I keep thinking about or I keep bothered about. The whole key is to keep finding something which will do good to our investors, our unit holders, our investments. Keep finding something which is cheap and keep doing that work, keep maintaining what we have and keep evaluating. And that's a very happy journey itself. And so I obviously try to unwind post office. Don't try to think too much about office after office. Spend time with family, children, pick up a sport, pick up a hobby, things like that.
You know, a decade ago, much as we are in the Good Wife restaurant, your good wife said, go follow your dreams. So are you living your dreams?
Yes. I think I'm quite happy about it, and my wife has a big contribution on that.
You enjoy going to work every morning?
Yes, it's very joyful.
You know, Mrinal, Robert Heinlein, who's a science fiction writer, said that anything that is physically possible can be financially possible also. You straddled both worlds, the physical world in mechanical engineering and now the financial world. Thank you so much for stopping by.
Thank you. Thanks, Ramesh.
We'll see you next week on another segment of the Wizards of Dalal Street, A Fresh Breeze.